Enchanté.
Fintrends is a podcast series dedicated to the trends and news in the finance sector. Launched by Soper Banking Software, this series involves experts discussing the hot topics in the industry. My name is Mari Lawrence, and today we're recording the third episode of Fintrends with Bruno Cambounet. So we're going to be delving into open banking. Hello, Bruno.
Hey, Maya.
So, Bruno, to start, thank you for being with us. You are currently the head of research at SBS, which means your mission is to identify, at an early stage, the areas to invest in and to shape SBS's strategy and market positioning. You're passionate about how digital transformation is reshaping the industry, and you're particularly fascinated by the potential that data openness offers, notably in educating everyone about finance. You're actively involved in various organizations, such as the Global Competitiveness Cluster Finance Innovation, the standardization body, the Berlin Group, and within the European Commission as well. So thank you again for joining us. In the previous episodes, we established why it was necessary for banks and fintechs to move towards open finance. So today we're going to see where open finance stands in the banking landscape. So my first question for you is, what is the difference between open banking and open finance?
Yeah, that's a good point. Open finance and open banking are a set of technologies, services, regulation, schemes, whatever is needed in order to create new use cases based on the collaboration of various players in banking and in finance, more globally. So this is really the basic to start with. The objective of both is, should be, really to make sure that the players in the market and or in the ecosystem are able to create added value services for the benefits of individuals, you and me, or enterprises, right? And especially small and medium enterprises. So now, if we delve into open banking versus open finance, open banking is more like a marketing buzz. It has no specific definition apart from what the very general definition we can provide. Helping third-party providers to provide more tailored and personalized services based on access to data, blah, blah, blah. But it's more like a marketing buzz, and it can range from what it is, where it is defined, like the PSD2, or even the Open Banking UK, which is really more payment focus, to things that might be large, where other banking services, but payment can be leveraged and open to access, etc. But actually, this is where open finance is, right? So, to make it long story short, open banking has been and is now more related to payment and is linked to the payment regulations. Across the world, it might be different, but it is what it is. And all the rest is a way how marketers from different origin can use the term, but it's very fuzzy. And when talking about open banking, you better need to clarify what the person is talking about exactly. So the open finance, as of today, if I take the definition of the European Union and the last proposal that the European Union has been issuing end of June this year, is focusing only on the sharing of financial data, whatever that idea is. So it's not only banking data, it's not only wealth finance data or savings data or insurance data, etc. Is all of this. The only thing which is excluded are the data which are out of scope, to make it very clear, are the data that may lead to financial exclusion of people or even enterprises. Okay. So the difference here is that open banking regulations, PSD, etc., has two legs. One is about sharing data, payment information, payment transaction, This is included into open finance, and also imposing a possibility for a third party to initiate payment. In other words, it's an open financial service. Open finance, as of today, as defined by the EU, is not including open finance services. While in other countries, for example, if I take Israel, Israel has been choosing Berlin Group, so I am very much aware of what is going on there. Not talking about other episodes this time. Anyway, they started with securities, and not only with information on securities instruments, but also the ability to initiate, buying securities or selling securities, etc. So this is interesting. Open finance should be, as a whole, should involve not only sharing the financial data, but also sharing access to financial services. And you mentioned finance innovation, the working group on open finance that I've been creating with them, as precisely when we worked on which use cases would be beneficial to enterprises and to individuals. We are not only talking about open finance data to be shared, we are also talking about initiating financial services. So this will come, but in the future. Anyway, so this is I would say the major difference. Now, there are other differences I would like to share also is how this has been implemented.
Okay.
And open banking regulation is imposing for free the sharing of data and the access to payment initiation. For the reason that actually, if you remember the history, this was the regulation has been set up in order to regulate the third-party providers which were already providing such services for free. So the for free is still in the regulation and is in the regulation for these basic services, let's say. Now, when it comes to open finance, even the EU proposed regulation, then there is a mean to compensate so in other words, to put a price on top of sharing some of the data information of personal individuals who consent to do so, right? And this is a very big difference between open banking regulations and open finance regulation as of today.
Okay, great. So what I'd like to know is I think we both know that global events and kind of macroeconomic triggers can really develop or help influence the development of different technologies. So can you tell me whether or not you think that COVID-19 has had an impact on the development of open finance in general?
Yeah, definitely. Definitely COVID has been impactful. It has, I would say two things. First thing is that it has been proving that it was possible to live and to interact and pay and order things in a trusted environment without physical contact.
Right.
And this has been a bit hard, but a real test, a crash test of the open finance regulation. And to this extent, I would say that COVID-19, to some extent, unfortunately, has been an accelerator. So this is a positive effect, let's say, of COVID-19. It has been an accelerator for digital business in general, not only open finance. Right. To be clear, but certainly putting into practice all what was already there, or it has been really instrumental and very positive. And certainly it helped also to have this regulation FIDA, the open finance proposal, to be issued, as well as to have a revision of the PSD2 as showing what it is right now with the PSR, etc.
Okay. So where would you say we stand currently with open finance? What are some of the challenges and some of the stakes at hand?
Yeah, so there are challenges. So as I mentioned, the EU Commission has been issuing FIDA. So the European proposal, the proposed European regulation. Okay. So I think that, yeah, if you go on with Europe, where do we stand is that there is a real maturity around open banking regulation. So PSD3, the revision of the PSD2, to be clear, has been creating two things. One is a PSD3, which is a revision of the PSD2. But even more interestingly than the PSD3 is the PSR, a uniform across European Union countries regulation to apply that embed all the regulatory technical standards, which are technical from a business perspective rather than from a IT technical perspective. And most of the players, not to say all the players, are in agreement with this. So it's great news for Europe, because PSR will not need any delegated act. There will be no difference between the way Italian, Spanish, French, German, Belgium, Netherlands people, etc., and others, Lithuanian, blah, 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 will apply the payment service regulation. So that's great news. And to be honest, I think all the discussions that happened, and it took 4 years, since 2019 until now, there have been so many exchanges with the EBA opinion and other opinions and discussions and questions and delving into so that it's really mature.
Right.
And that's a very good thing, because when we are going to we are going to look for having a 360-degree view of each customer from a financial perspective, that's basically what open finance is at. Well, you better need to have done at least all this journey on one singular, let's say, domain, which is payment. It's much better. We have a reference. So, to your question, where we are, when we have on the table this revision of a PSD2, which is decomposed into two texts, PSD3, PSR, we have already the proposition of FIDA, which is focusing on data sharing. We have the standards, at least one standard which is across all countries in Europe, with 75, some say 80% of the banks, the Berlin Group, which is not only implementing the PSD2, but which has already implemented the EPC SPA scheme, which is, well, we had the V1.1 in the middle of 2023 this year. We'll have a V2 very shortly. And that's very good news for everyone, because the SPA, even is focusing on payments only, is really providing added value services, billable APIs, which is not part of the PSD2, right? And with having the scheme with billable APIs, the standard, technical standard to implement and support this. This is a really good news for kickstart of these things. And then this is also preparing the FIDA. Well, yes, I think, 1 year ago, I remember some podcasts or events, I was thinking that we were at the inflection point at the end of the year 2022. I think this is what happens today. And honestly, this is very exciting.
Okay. So you talked a lot about Europe. But what I want to know is, what do you think about the current move around open finance globally?
Oh, that's a very good point. Thank you. Well, as I mentioned, there are different, let's say, different different approach to open finance across the globe. And I mentioned at the very beginning, maybe our first podcast, I mentioned the difference between North America and UK, Europe, but beyond the regions, what we can see is that one, no one is unregulated. All this happens always under some sort of regulation. The regulation might be at least focusing on personal financial information protection. This is how it happened in the US. Or it can be highly prescriptive, like in the UK with an operator which has been set up in order to manage the evolution of a standard, the qualification of the players, the supervision, everything. Okay, and in the middle we have some countries like EU or federated countries like EU, which are, maybe being in the middle, pushing for a certain view, politic view, or socio-economic view of what needs to be done, and putting the setting a level playing field from a legal perspective of what can be done and cannot be done, but going beyond only the protection of the data, personal data, but not ending up to a standard and things like this. So back to your question, it's very interesting that in North America, CFPB, a Consumer Financial Protection Bureau, has been issuing a proposal to improve the 1033 Act, Frank Act. Repeat. What is very interesting is that the CFPB, the Consumer Finance Protection Bureau in the US, has issued few days ago, 10 days ago, something like this, not much, the proposal to improve the Dodd-Frank Act, article or chapter 1033. And this was announced, by the way, 1 year ago at Money 2020 in Las Vegas. And the head of the bureau was explaining that we need to move forward. And it was kind of in the same vein that what Open Finance in Europe is doing. So the discussion starts. The feedback period is open until end of this year. Honestly, I've not yet read into all details what it is in there. But I think this is very interesting. So still, it will not be prescriptive. It will certainly has the market to organize. However, it goes way further than only putting a legal protection of the right for individuals to share with third parties their financial data that are owned or that they are managed in data holders, meaning banks or financial institutions. So this is very good news. There are other countries which are looking for more interoperability. For example, in Africa, when we are talking about open finance or open banking, first hurdle is about interoperability. And well, this is relatively basic, but it's really crucial in Africa because in Africa, what is very different than any Western countries is that the mobile payment has been really used. So digital money, to some extent, they know it because of the way of paying. And if you go in shops anywhere in village, a small village, you have QR codes depending on which who you are, who you can pay a merchant by QR code, even if you don't have any bank account. But there is interoperability issues that is creating kind of entropy and cost and making payments not as seamless as they should, etc., etc. So open banking may need to address first level that first stage that we talked about, but in a way which is certainly drastically different than what we did in Western countries. There are also countries like with authoritarian or more authoritarian, let's say, regimes that can impose different ways of doing things, and then, well, that's a very different story than in more democratic areas and with federated countries like we have in Europe.
Okay. So through data sharing, I think we can say that open finance is leading us towards what some people are considering an open everything across all sectors. So what are some of the opportunities that you see in that regard?
Well, yeah, I think that, well, first of all, open everything might be very conceptual. But let's come back to what this is about. And open everything comes first from the hyperconnectivity. Everything can have. And when I say everything, I have a simple example that everyone will understand. We are talking, if you think of your fridge, if it becomes hyper-connected, as we are all, we can think of a fridge which will make orders on their own, depending on your habits and your will.
Yes.
Like, I would like my fridge to take care of what I need in order to make myself cooking and to, at the same time, improve my healthness, and fitness. Very simple. Everybody will understand, and to some extent, everybody would like to be able to do so, right? Hyperconnectivity enables this. It needs, of course, technologies like IoT,
right,
to have those connected. It's also about data exchange. We've talked a lot about data exchange in the vein of finance, so you see what I mean, and standards. It's also about privacy enhancement. You certainly don't want everybody knows what you are eating, how you are cooking, what you are cooking, and when, blah, 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 okay? And what you want to do. You want to be just in between you and your fridge and with maybe not much people. You will need AI in order to analyze your wishes, and what do you consume, what do you like to cook, and what do I need in order to be more healthy, and it needs a little bit of intelligence. And, well, of course, you'll need open finance, because at one point of time there will be finance involved, and finance is really supporting all the processes here. So this is, I think, if I put simpler, this is something that, from a technology perspective, is possible as of today, and this is certainly what open everything or open finance will support, the open everything stuff. So we are not very far from there. What is certainly the most challenging part is if you remember the trio, artificial intelligence, privacy-enhanced technologies, or privacy enhancement, generally speaking, and data exchange. I think we are pretty good on data exchange, at least in terms of technologies, because of open banking, etc. On the two others, that's a different story. But you need to, this concept needs to be intertwined. Otherwise, you can talk about artificial intelligence, ChatGPT, whatever. But if you are not thinking of what does that mean for me in order to be well fitted and cook what I want to be more healthy, we are missing the point.
Okay. A few minutes ago, you mentioned that we have to make sure that not everyone knows. If we were to imagine to have this fridge that could do everything for us, we wouldn't want everyone to know what was going on with our fridge and in our kitchen and what we were eating and what our diet was and all of that. So how can we really protect end customers if everything ultimately is going to be open? What can be done about that?
Yeah, so there are two responses. The basic response is to say, well, actually, and GDPR is really about it. FIDA adds on top something in terms of open finance, which is a part of the openness that we're talking about. It's really that the end user, the consumers, need to consent to share data with whom. And in order to have trust, FIDA is adding on top of, because this is what GDPR is saying basically. FIDA is adding something on top, is to provide transparency. So to make sure that the players in this particular, in finance, this is, at least as of FIDA is mentioning it, if this is a data holder who holds the data for you, who is holding also a kind of dashboard in order to make sure that you are aware that you have been sharing your data with this and that. So you don't need to ask for Google what has I've been accepting this cookie or whatever, and but eventually where I am, I don't know. Well, FIDA is really adding transparency in order to improve the trust. Well, so basically, consent, which is based on a trustable, let's say, framework, should solve the thing. At the same time, I remember in the early days of SEPA, Zofort asked for the credentials of people in order to pay, and to pay more fluently, more seamlessly, blah blah blah, maybe less costly. And guess what? People accepted to share their banking account credentials in order to pay a pair of shoes. Okay. Well, so they consented to. Well, how far should we protect consumer against themselves? I don't know. If I take another example, especially in the US, your ID, your digital ID, can be stored in a wallet which is a proprietary wallet, not regulated. And the reason why it is so is that it makes your checks in checkout when you are paying something or wanting to take a contract or to onboard or something. It's very fancy, very easy when you are traveling. It is your ID on your smartphone is recognized by the FDA, so you can you can go through the border controls, etc., very easily. But it's still a proprietary wallet. So I think that it's kind of I would say how we want in a human society to behave. I think we need to size that depending on what's at stake. A consumer and a human being can accept lots of things, even in a democratic way. In more authoritarian, that's no question. You want to eat a burger, okay? You need to prove that you are healthy enough, and you get your points, etc. And everybody is looking at you, and you don't have nothing to say. Basically, this is what the government say. So if you are not happy, well, we can come and control you. So it's really about where you live. I may not have chosen to live in such countries, and what you want that's the good aspects of politics. What society you want to live in. So in this regards, that's the role of regulatory, to set the level playing field into which we make sure that we feel, as a government or as a regulatory organization, we're translating what the people are looking for. And then, but from a technology perspective, we can protect. Yes, sure. That's about consent. That's about identification, authentication, authorization. That's about all the checks we can be doing. And as FIDA mentioned, we can set the specific, let's say, capabilities across the players in the field to make sure that eventually the consumer feel comfortable and feel trusted in such an environment.
Okay. So at the beginning of our conversation, we were talking quite a bit about Europe. So I'm going to go back to Europe now, and I want to ask you about the open finance framework. Can you tell me how data standardization and interoperability are addressed in the open finance framework?
We had a lot of discussions on this. Should we impose a data standard? Should we impose the responsibility, the role and responsibility in the ecosystems in regards to the data, etc.? And should we set this into the stone of a regulation? Considering how it happened in the UK, because it's a very good way to go quick.
Right.
The regulation impose a standard, impose maybe very prescriptive, like what happened in the UK, and then set this into stone, set this into organizations, etc., etc. Then it becomes very difficult to evolve. You know, the challenges of UK as of today is really how to evolve quickly, and this is not moving much, especially if you want to move from a pure payment domain like OBI is right now to a very wide open finance framework. That's very different. You need to embed other players, and it's very difficult. So what Europe is doing, and I'm very happy with the decision, and I know that the Berlin Group editor, for example, to cite an example, is very happy that the Europe is not imposing a standard, nor the EPC being imposed regulatory speaking. So the framework is still a framework. However, the two things in Europe. One, this is not a directive. So this is something that will apply the same across the various countries of the European Union. That's number one. This is not how the PSD has been played at the beginning, either PSD1 or PSD2. But the PSD3, this is how they will play with the PSR. So this is a lesson learned in Europe. Two, there is no mystery. In order to operate across Europe in the same way, in a way which is seamless, efficient, and effective, you need to have common standard, common process, etc., etc. But that's precisely where industries need to cooperate and work together. So the European Union in FIDA is not imposing a scheme nor a data standard nor APIs, nothing like this, but they are imposing the market to come with schemes, with data standards, etc., etc. And the incentive for this is that if this is happening, the players which are owning or managing the data, what we call the data holders, like the banks or the insurers or others, will have an ability to be compensated for the sharing of data in a way which is efficient and performing well, so that there is an incentive.
Okay.
So it's very first. I mean, this approach is not specific to finance. It's not specific to FIDA. It's something that you find in the Data Act, how to share and what to share and what is the opportunity to share data. But this is how it is, and I think that maybe the most important, interesting things in FIDA. So let's see how things are going to happen. There will be lots of discussions just because of the scope of FIDA, which is really huge in terms of financial institutions. But what I think is really interesting.
Okay. And one last question for you I have is how open banking impacted competition within the EU. So are there examples of any kind of new entrants or fintech companies that are gaining market traction, even though the adoption might be slower than might have been expected?
Okay. Well, I would like to share a few numbers.
Sure.
As I mentioned at the beginning, I would say that open banking was born in the US with the Yodlee. I mentioned Yodlee in 2005. What is very interesting, and it was very early, I mean, almost 20 years ago, 18 years ago.
Yeah.
Yeah. So if you look at the last stats You know, in in North America, so not only in the U.S. but also in Canada, in North America, the stats, I think that Juniper, yeah. Anyway, an analysis is showing that there is something like millions, few millions, 3, 5 millions, something like this, users, so end users of open banking as of today, and it grows, but very slowly. In Europe, we are already at more than 10 million. We are in the 10 millions, maybe 15 million as of today, users. So and it grows like this. So my outcome on this is to think that actually regulation has been really helping and fostering innovation. There are hundreds in Europe, hundreds of third-party providers that have been created, focusing on, and that's where we love fintechs, focusing on their tech savviness to address specific ultra-focused use cases. And depending on countries, some countries are more focusing on the early stages or stage one, the banking services level 0, like day-to-day payments or wealth management, things like this, or financial management. And other countries are focusing already in the stage 2 with a creditworthiness, financial health, etc., etc. And this helps. And so yeah, these are first numbers I would like to share. Now there are other things. I think that what happens is that the open finance has been creating new ways of leveraging finance, and banks are less and less concerned of maybe becoming invisible. In other words, providing their services to third parties or even non-finance players that are leveraging their those financial services in order to serve the customers. And banks, in some segments, would prefer to go this way and gain the usage of their financial services through other players, rather than trying to do the same directly for the sake of having a direct contact with customers. And that's I think really really interesting. Now back to the point in terms of slow adoption. So I mentioned, well, I would say North America is more laggard in terms of adoption of open finance. And well, with what happened with the CFPB, we'll see how this is progressing or not. But I think what has been very well received and very well used so far, and where there is most traction, has been on account information sharing, the access to payment information. Precisely where open finance is focusing, but for all flavors of financial services, generally speaking, or all financial data, generally speaking. What is really lagging behind is payment initiation. So the access to financial services, per se, initiating financial services. And the reason why is that what has been put into regulation is only a small step into the full value chain. So let's wait 1 year or 2 years to see how these new schemes and operators on top of these schemes will act and will leverage in order to make the account-to-account payment instruments, which are behind, as a true payment means for you, me, and the enterprises in general. Now, I think that the large players, like say the major players in credit cards, MasterCard, Visa, and maybe others, I've seen at least the danger, the threat of account-to-account payments, and certainly the opportunities. These are the right people, and look, they have been buying out some major players in the domain of TPPs. You know, with Visa buying Tink, one of the last stuff, Mastercard buying Finicity. You know, AIA also. They are investing massively in open banking in this way of working. So I think, and it's not, you know, it's not little money here. We are talking of billions, huh? So yeah, I think even if open banking regulation and future open finance is not yet there and very unevenly developed across countries, there are very strong signs that this is transforming and revolutionizing the way finance can be consumed and consumed more largely. Few other numbers I would like to share, and these are really public ones. When Euro Commission has been pushing forward the FIDA, they shared all the assessments they have done in order to bring benefits to the economy. As I mentioned, we are targeting benefits for individuals and enterprises. And what FIDA, what the European Commission is saying is that this is worth an order of magnitude of 10 billion euro per year for the market, for the benefits of a, let's say, European market. And if I focus on enterprises, this is even more precise. They are saying that for SMEs, FIDA would bring for, and the number is something like 25,000 SMEs across Europe. This would bring additional funding capabilities of 2 billion euro per year. So this is not little money. I mean, there is a strong benefit. At least the good news is that it's not regulation for the sake of regulating.
Right.
You know, PSD2 came because of a risk created by third-party provider going to screen scrap and things, doing a couple of things. And it was a reaction to that. Quick reaction. It brings and set the scene. It brings lots of things on which we are building. Now, the regulation, at least in Europe, but I think in North America, because we are in the same line, it's for the sake of the benefits of the economy, individuals, enterprises, and the assessments are done with this regard, not only banking-centric, not only financial institution-centric. So, and when we consider and we see in the DBX that the banks, at least the banks, as part of the financial institutions, are more and more ready. I mean, 3/4 of the banks we interviewed across the world, 3/4, even more, I think that's 78 or 80% of them, are saying that the creation of value will come from collaboration. Because this is how you can bring more value to your end customers. So there are no more banking product-centric, like open banking or open finance. You know, we are only talking of banking and finance. We are enterprise-centric. So all this is really bringing value to support the real economy, and that's very enthusiastic. I'm very excited with this.
Okay, thank you, Bruno. So from our series of 3 episodes, I'm going to try and sum it up. Of course, you jump in, let me know if I missed anything. We have decided that the definition of open banking is a bit vague, and that we can't really settle on the definition or a definition because it's just not pinned down quite right. And that's the reason why Europe has perfectly defined open finance. And with open finance, we're kind of seeing that we're finding a definition that positions finance as a whole and services to individuals and to businesses. And we're in the process of building the finance of tomorrow in an open world that goes well beyond finance. And as you said, that's very exciting because we're going towards new, very interesting things in the future. Did I miss anything?
No, the only thing is that the technologies are there and regulation around security and trust to make sure that all these people in the ecosystem feels comfortable to move forward is there.
All the people, right, because we're talking about inclusion too. So, important point.